Folks, we have breaking news today. The Strait of Hormuz is back closed as of Saturday morning. Iran has fired on a tanker attempting to pass through the strait, and all other tankers are now turning around. Iran has claimed that the U.S. broke the trust they were building. The perfect scenario that drove the stock market to all-time highs is now under serious threat. This is the core risk. When everyone is singing Kumbaya and markets are overly extended, any shock can hit hard. What makes this even more significant is that we had just slammed into the major parallel that has marked the top of this market for 6 years, and the lower band of that same parallel has marked the bottom for 6 years as well. Let's look at the charts. On Friday, the S&P 500 zoomed all the way above 7,150. If we zoom out, we can see the former major pivot from October 2025. Notice that during the recent drawdown, we went exactly to the midpoint, then snapped back. And where did things go wrong? Right when the chart tagged the upper band of the parallel. Looking at the lows from April 2025, that's your tariff liberation sell-off low, right at the low of the parallel. Go back to the bear market of 2022, it hopped, skipped, and jumped off that level 1, 2, 3 times before taking off. And the bull market high of 2021, that was right at the upper band. The low of this parallel starts back at COVID. This is the kind of chart structure that genuinely excites me. While everyone was getting extremely bullish on Friday, and I understand why. It was one of the most incredible rallies we've ever seen, going up that far in that short a time frame to make new all-time highs. Markets can turn on a dime when they slam into major resistance like this. Now, to be fair, we know how the president operates. By Sunday night, or even Monday morning, we could easily see the Strait of Hormuz open again. That's always a possibility when there's still time before the next market session opens. But there's also a chance this escalates further. Drones, missiles, we don't know yet. What we do know is that this chart level got tagged, and then, almost miraculously, this news breaks. As a result, if the situation holds through Sunday night, oil will likely gap up sharply. Looking at the US oil chart, we had a beautiful topping signal that I believe will remain the high for years to come. We saw the reversal down, the inside bar bear flag, and then a breakdown lower. As I've said over the past week, oil was going to come down to the 75-80 range, and once it got there, it would get sticky. The reason for that stickiness? Countries that were hit by the oil shock are now going to start building their reserves at these prices, just in case Iran closes the strait again. Now, there's another important factor I want to address, and you know I'm always a straight shooter. Options expiration was on Friday. 2 weeks ago, everyone was extremely bearish. The fear and greed index was at extreme fear, which meant heavy put buying bets that the market would go down. Here's how this works. Institutions sell roughly 99% of all options contracts, while retail buys 99%. Institutions make the maximum profit when those contracts expire worthless. They keep the entire premium as pure profit. So if institutions see massive put buying and the market keeps falling, they're on the hook for big losses. But if they can help engineer a rally, get some positive news flowing into options expiration, and the market pops back up right before that third Friday of the month, all those puts expire worthless, and institutions take that money straight to the bank. Then a new options cycle begins, and the market is free to do whatever it wants. And what did we hit on Friday? Options expiration right at that chart top. You genuinely cannot make this stuff up. The move itself was extraordinary. 13% on the S&P from the lows. On the NASDAQ, an 18% move from low to high, absolutely incredible. My view on the NASDAQ is that we could pull back into a logical support zone, then potentially get one more move up to tag that upper parallel, perhaps driven by better than expected earnings later in the season. Think about this parallel: bull market high of 2021, bear market low, tariff low, bull market high of 2025. And now this correction and recovery. Could this next tag be the bull market high of 2026? To summarize, on Friday, extreme bullishness had taken over, and that is never a good sign. When investors get overly bullish, highs tend to be in. When they get overly bearish, like we saw a few weeks ago, lows tend to be in. Watch sentiment carefully. Markets slammed into major resistance, and then, right on cue, the Strait of Hormuz closes again. Iran fires on a tanker, and the situation escalates. Let's watch closely how things develop Sunday night into Monday morning. I'll be here to keep you updated.